Radio app.
Next, a look at the uses and security concerns of virtual currencies. Witnesses took questions about the potential advantages and disadvantage of cryptocurrencies and addressed their use by criminal enterprises. The House Financial Services Subcommittee on Monetary Policy is chaired by Congressman Andy Barr.
The committee will come to order. Without objection, the chair is authorized to declare a recess of the committee at any time, and all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. This hearing is entitled The Future of Money, Digital Currency. I now recognize myself for 5 minutes to give an opening statement. Today, we will discuss the future of money and how digital currency may feature in it. When discussing the future of money, it is pertinent to have a firm understanding of its defining characteristics and history. Economists define money as anything that acts as a store of value, a unit of account, and a medium of exchange. Various objects have been used as money, such as seashells, giant stone tablets, and cigarettes in prisoner of war camps. Commodities such as furs, rice, whiskey, tobacco, and corresponding warehouse receipts circulated as money on the American continent in the colonial period. Prior to America's independence, Americans imported gold and silver coins from European countries to use in trade, and the colonies issued their own specie before they and the Continental Congress began experimenting with paper money. Even the U.S. dollar has evolved since it was declared the standard unit of currency with the passage of the Coinage Act in 1792. It has undergone changes in dimensions, design, denominations, issuer, and backing, notably with the implementation and subsequent abandonment of the gold standard. In recent decades, money has been electronically stored in bank deposits and transferred with credit cards, mobile phones, and the Internet. Cryptocurrency, however, was designed to be something different. Cryptocurrency allows users to potentially store value unlinked from fiat currency on a decentralized ledger and securely transact directly from person to person across a peer-to-peer network of computers apart from a commercial or central bank. The central question before us today is this: are digital currencies simply a new way to hold and transfer value that will have a limited impact and niche appeal, or will it, or derivative of it, have a far-reaching transformative effect that will change our economy forever? Cryptocurrency has existed for a decade, since the appearance of Bitcoin in 2009, but has flown under the radar for most of its history. For years after its creation, it was worth little, had few users, and garnered sparse mainstream media attention. However, the media and consumers have been taking note. With a stark rise in value in 2017, Bitcoin grabbed headlines as it reached a valuation of around $20,000 US last December. Also reported are controversies such as Bitcoin's involvement in purchases on the online black market, the Silk Road, and donations funding WikiLeaks, the theft of hundreds of thousands of Bitcoins from the exchange Mt. Gox, and reports that hackers have stolen $1.6 billion from cryptocurrency accounts over the last 7 years. Congress must pay close attention to the developments in this space. The Capital Markets Securities and Investment Subcommittee held a hearing examining the cryptocurrencies and initial coin offering markets in March of this year, and the Terrorism and Illicit Finance Subcommittee held a hearing to discuss illicit use of virtual currency and the law enforcement response last month. As chairman of the Monetary Policy and Trade Subcommittee, I am particularly interested in any impact digital currency may have on monetary policy and the international financial system. We will discuss its use both in the United States and abroad. Thus far, some countries, like Vietnam and China, have banned or restricted it altogether. Others, such as Switzerland and Malta, have fostered it with a mostly hands-off approach and regulatory guidance. And others have adopted it, including Tunisia and Ecuador, by issuing their own central bank digital currencies. How ought the United States government approach this new technology is of great importance. Some believe, as former Fed Chairman Ben Bernanke highlighted in a 2013 letter to Congress, that digital currency innovations, quote, may hold long-term promise, particularly if the innovations promote a faster, more secure, and more efficient payment system, unquote. Some have suggested that cryptocurrency may be a catalyst for the elimination of physical currency and a foundation for a move to a purely cashless society. Others say that cryptocurrencies are not suitable replacements for coins and banknotes, such as European Central Bank Executive Board member Benoit Coe and the chair of the Bank for International Settlements Market Committee, Jacqueline Lowe, who in a joint article in the Financial Times entitled "Bitcoin Not the Answer to a Cashless Society" called cryptocurrencies, quote, something of a mirage, unquote. Cryptocurrency has attracted advocates, critics, skeptics, entrepreneurs, investors, and attention from media, government agencies, and law enforcement. Today, there are well over 1,000 different cryptocurrencies with various characteristics, together comprising over $250 billion of total market capitalization. Will cryptocurrency be the future of money? Are they in a bubble that will burst, or even just a passing fad? These are the sorts of questions we will attempt to address today with our witnesses. The chair now recognizes Mr. Foster for 5 minutes for an opening statement.
Thank you, Mr. Chairman, and thank you to our witnesses. I'll be brief because I am actually very interested in this topic, have been for a while. I look forward to the testimony of the witnesses and hope to hear about currencies that are not only pure crypto, but asset-backed crypto and potentially digital fiat currencies, and most significantly, digital fiat currencies. I'm concerned that if a significant central bank could issue a digital currency, that it would have the potential to supplant the United States dollar for many transactions and even as the reserve currency around the world. And despite the reports that they're exploring it, countries like Russia or Venezuela are not really credible economies that could issue fiat currencies that would supplant the dollar. But if, however, the ECB were to issue digital euros, then I think the entire world would very rapidly adopt that for many digital transactions, which would have benefits to consumers and a number of risks associated with that as well. And if there is really a credible threat that a digital foreign currency would supplant the dollar, we have to be prepared to respond to that threat. I look forward to hearing from witnesses on the economic feasibility of another currency supplanting the dollar and whether digitization could be a catalyst in such a transition. I also look forward to any thoughts the witnesses might have on some of the decision points that have to be made when you decide to create, for example, a fiat currency. The currencies could be traceable or not. They could be traceable only with a court order. Whether or not trades could be busted in the same sense that a credit card purchase can be broken if you convince some entity that the transaction was fraudulent. And who makes that call, under what circumstances. These are what I see the really important decisions that cannot be evaded when we design a digital currency. And so the issue of anonymity is really crucial and at the heart of this, as well as what sort of authentication a person will have to present to transact that anything. So I look forward to this hearing very much and yield back.
Gentleman yields back, and the chair recognizes for the remainder of the time Mr. Sherman for an opening statement. 2.5 minutes.
Thank you. Blockchain is a good technology, but it can be used to track and transfer sovereign currency. There is nothing that can be done with cryptocurrency that cannot be done with sovereign currency that is meritorious and helpful to society. The role of the U.S. dollar in the international financial system is a critical component of U.S. power. It brought Iran to the negotiating table, and then we argue about whether we got a good enough deal or not in the JCPOA. We would have nothing had it not been for the role of the dollar. We should prohibit U.S. persons from buying or mining cryptocurrencies. Mining alone uses electricity, which takes away from other needs and or adds to the carbon footprint. As a store, as a medium of exchange, cryptocurrency accomplishes nothing except facilitating narcotics trafficking, terrorism, and tax evasion. Some of its supporters delight in that. That if you can disempower the U.S. government from being able to prevent terrorism, narcotics trafficking, and tax evasion, you have somehow struck a blow for liberty. That is reason enough to ban it. But its role as an investment is at least as bad. We have certain animal spirits in our culture, a willingness to take a risk, to place a bet. This can be harnessed by gambling casinos, which at least pay very high local taxes and created a city of Las Vegas out of a desert. We can better yet harness those animal spirits to get people to invest in risky stocks, startup enterprises, and provide the technologies and jobs of the future. Or we can see those animal spirits spent doing nothing but helping create a market for tax evaders, narco-terrorists, and others who find that the U.S. dollar is not to their liking. At a very minimum, we need investor protection if we're going to have people invest in cryptocurrencies, and crypto offering memoranda and crypto registrations would be considered outright fraud and reason for incarceration if they were issued by somebody selling stocks, bonds, or any other investment. And finally, there is seigniorage, the money that we make as a country because we're the reserve currency, because we can issue a greenback that does not yield interest. There are people who are alive today because of the profits the U.S. government makes on that, whether it be to fund defense or medical research. All of that gets diminished with cryptocurrency. I yield back.
The gentleman's time has expired. Today we welcome the testimony of Dr. Rodney Garrett, who holds the Maxwell C. and Mary Pellish Chair in Economics at the University of California, Santa Barbara. He has served as a technical advisor to the Bank for International Settlements, a research advisor to the Bank of England, and as a former vice president of the Federal Reserve Bank of New York. During his time at the Federal Reserve Bank of New York, he co-led the Virtual Currency Working Group for the Federal Reserve System. After leaving the Federal Reserve Bank, he consulted for Payments Canada and R3 on Project Jasper, a proof of concept for a wholesale interbank payment system. Mr. Garrett received his PhD from Cornell. Dr. Norbert Michel, who is the director of the Center for Data Analysis at the Heritage Foundation, where he studies and writes about financial markets, cryptocurrencies, and monetary policy. Before rejoining Heritage in 2013, Michel was a tenured professor at Nicholls State University's College of Business, teaching finance, economics, and statistics. Dr. Michel holds a doctoral degree in financial economics from the University of New Orleans. Dr. Eswar Prasad is the Tolani Senior Professor of Trade Policy and Professor of Economics at Cornell University. He is also a Senior Fellow at the Brookings Institution, where he holds the New Century Chair in International Trade and Economics and a Research Associate at the National Bureau of Economic Research. He is a former head of the IMF's China Division. His extensive publication record includes articles in numerous collected volumes as well as top academic journals. He has co-authored and edited numerous books, including on financial regulation and on China and India. Finally, Mr. Alex Pollock is Distinguished Senior Fellow with the R Street Institute. Welcome back to the committee, Mr. Pollock, providing thought and policy leadership on financial systems, cycles of booms and busts, financial crises, risk and uncertainty, central banking, and the politics of finance. Alex joined R Street in January 2016 from the American Enterprise Institute, where he was a resident fellow from 2004 to 2015. Previously, he was president and CEO of the Federal Home Loan Bank of Chicago from 1991 to 2004. Alex received his master's in philosophy from the University of Chicago and a master's of public administration degree in international affairs from Princeton University. Each of you will be recognized for 5 minutes to give an oral presentation of your testimony without objection. Each of your written statements will be made part of the record. Dr. Rodney Garrett, you are now recognized for 5 minutes. If you can just push the button there to turn on your mic. Thank you.
Thank you, Chair Barr, Ranking Member Moore, and members of the subcommittee. The convenience of electronic transfers has led to a decline worldwide in the use of cash. This is particularly true in countries where systems for transferring commercial bank deposits are more advanced. Sweden's mobile payment system, Swish, has been adopted by over 60% of the population, and cash use in transactions has fallen below 2% by value. Countries around the world are introducing their own faster payment systems, including the recently launched real-time payments platform in the United States. At the same time, PayPal, Venmo, and other private mobile payment platforms continue to improve convenience and speed of person-to-person and retail payments by leveraging conventional financial market infrastructures. It seems likely that the use of cash will continue to fall, and it's worth noting that there is a tipping point at which even if consumers seek to use cash, businesses and banks will not want to deal with it. What happens then? One possibility is that people will be content to transact primarily in commercial bank deposits, and things will be business as usual with a much smaller cash component to the monetary base. Another possibility is that people will demand direct access to some form of digital central bank issued money as a replacement for cash. And a third possibility is that people will turn to privately issued cryptocurrencies like Bitcoin. These options are not mutually exclusive, nor are they independent. The adoption rate of Bitcoin will depend not only on its performance as a money, but also on the alternative forms of digital money that the central bank provides. If consumers perceive that they have inadequate access to a cash-like medium of exchange, then they may be more inclined to turn to alternatives. On the other hand, if the central bank offers a digital form of central bank money to the public with sufficient cash-like properties, then perhaps this will appease those who miss cash. Central banks are currently evaluating numerous options for digital currencies, not just in response to the shift away from cash, but also for meeting core objectives and the enhancement of financial market infrastructures. Ongoing proofs of concept by central banks and private partners consider the use of central bank cryptocurrencies in wholesale systems only. These applications are driven by efficiency and cost considerations and have minimal monetary policy implications. In these opening remarks, I will focus on the merits of a widely accessible, retail-oriented central bank cryptocurrency that could be used for person-to-person and retail transactions. As suggested in blogger J.P. Koenig's FedCoin proposal, a retail central bank cryptocurrency could transact like Bitcoin. However, instead of having a fixed money supply rule, the Federal Reserve would control the creation and destruction of these coins. Crucially, there would be one-to-one convertibility with cash and reserves, and hence a retail central bank cryptocurrency would not suffer from the high price volatility that undermines the usefulness of Bitcoin as a store and value and medium of exchange. The Fed could also choose to implement a cryptocurrency on a permissioned blockchain, which means transaction validation could be performed by vetted actors who are accountable for their actions without costly proof of work. Proposals to increase access to digital central bank money have been made before. Nobel laureate James Tobin proposed giving the public access to deposited currency accounts at Federal Reserve banks over 3 decades ago. A number of things have changed since Tobin's proposal. As I mentioned, the use of cash has declined. A major financial crisis may have changed some people's attitude towards commercial bank deposits. And technological advancements offer the potential for issuing digital central bank money in a new way with enhanced features. I offer 2 examples. First, the peer-to-peer aspect of cryptocurrencies could allow central banks to provide a digital money with anonymity properties similar to those of cash. Whether or not the central bank would want to do this is a complicated issue that requires balancing legitimate demands for individual privacy against concerns related to tax evasion and other criminal activities. Second, there is the potential to improve upon cash by creating what advocates of cryptocurrencies call programmable money. Programmable money allows trading partners to hardwire the terms and conditions of trades into their transactions so that they may be executed upon fulfillment of these conditions without relying on third parties. This is particularly useful for transactions that span multiple legal jurisdictions. Any decision to implement a retail-oriented central bank cryptocurrency would have to balance potential benefits against potential risks. A common objection to expanding access to central bank money is that it could disintermediate banks. However, it is also plausible that it could produce healthy competition. The risk of excessive disintermediation would be mitigated by making any new form of central bank money more like cash and less like deposits. Thank you, and I would be happy to answer any questions.
Thank you. Dr. Norbert Michel, you're now recognized for 5 minutes.
Chairman Barr, Rep. Foster, members of the committee, thank you for the opportunity to testify today. My name is Norbert Michel. I'm the director of the Center for Data Analysis at the Heritage Foundation, and the views that I express today are my own. They should not be construed as representing any official position of the Heritage Foundation. Cryptocurrencies have rapidly expanded since the introduction of Bitcoin in 2008, and their underlying technology, a distributed database that allows digital assets to be transferred without a third-party intermediary, holds the potential to transform the financial industry. This innovation should be fostered, not smothered. My remarks today will provide 4 specific points relating to the use of cryptocurrencies, cash, and other alternative forms of money. First, electronic means of payment have become more widespread as the technology has changed, but paper currency, cash, is still a widely used form of payment. The demise of cash has been widely and steadily predicted since at least the 1970s, yet it remains a preferred method of payment for many people. Federal Reserve reports show that cash is still the most frequently used form of payment in the U.S., and that it plays a dominant role for small value transactions. It also remains the leading payment instrument for expenditure categories such as person-to-person gift transfers, food and personal care supplies, and entertainment and transportation expenditures. As the charts in my written testimonies show, both the volume and value of currency in circulation in denominations including all the way from $1 to $100 bills have steadily increased since the 1990s. That's increased. So retail establishments that prohibit customers from using cash, as was recently reported in a Washington Post story, do so at their own peril. But this danger, this threat of consumers using an alternative form of payment, possibly at an alternative place of business, is exactly as it should be. Competitive processes should take place so that businesses and consumers can discover the best means of payment. The fact that cryptocurrency is a new option for making payments, though it is in its infant stages, should be embraced. That brings me to my second point, which is that the federal government should not step in and tilt the playing field. It should treat cryptocurrency and all other forms of money neutrally. This means that it should not bestow any particular legal advantage on any particular alternative form of money, and that it should remove all legal barriers to using alternative forms of money. Removing capital gains taxes from purchases with alternative currencies, including cryptocurrencies and foreign currencies, would be a major step towards leveling that playing field between alternative forms of payment. To further level the playing field, Congress should even consider allowing the U.S. Postal Service and other government agencies to accept these alternatives. My third point is that these competitive forces are the forces that push entrepreneurs to innovate and improve products specifically to satisfy their customers. They also expose weaknesses and inefficiencies in existing products. These same competitive forces can and should be used to improve money. The federal government's partial monopoly on money limits the extent to which competitive processes can strengthen money, and it exposes our money to the mistakes of a single government entity. Nothing can provide as powerful a check against the federal debasement of money as the threat of competition from viable alternative forms of payment. My final point is that centralizing cryptocurrencies within any government agency makes little sense. The technology promises potential benefits because of its decentralized nature. Centralizing the technology at a central bank offers no particular advantage over a more traditional electronic database. Furthermore, Congress and the administration should do all they possibly can to ensure that our central bank never offers retail bank accounts to the public, whether via a central bank-backed cryptocurrency or via a more traditional digital form of money. Implementing such a policy would give the federal government a complete monopoly of money and effectively nationalize all private credit markets. No private entity would be able to compete with the federal government for funds. Even Ken Rogoff, a staunch advocate for phasing out cash and forcing people to use only one type of digital money, admits that the biggest threat to the value of currency is often the government itself. That Rogoff quote is, quite frankly, an understatement. Giving the federal government the power to directly take money from its citizens with a few computer keystrokes in the name of some vague goal of stabilizing the economy simply amounts to the death of economic freedom, is a terrible idea, and it is Congress's duty to protect Americans from those sorts of tyrannical acts. Thank you.
Thank you. And now, Dr. Prasad, you're recognized for 5 minutes.
Chairman Barr and members of the committee, thank you for the opportunity to testify in front of you on the implications of digital currency broadly defined for the U.S. economy and financial system. I should note that 2 years ago, I faced an important choice one afternoon, whether to spend that afternoon buying Bitcoin, which is not a trivial process, or to start working on a paper about Bitcoin and digital currencies. For better or worse, I chose the latter. So today I have no Bitcoin, but I do have a paper about the implications of digital currency. It's useful to frame our discussion around three questions. One, should the government or the Federal Reserve provide services that the private sector can provide more efficiently? That is something that a cryptocurrency, for instance, could provide. Second, what are the implications for the Fed in terms of its monetary policy objectives of low inflation, high employment, and most importantly, financial stability if digital currencies become widely prevalent? And third, what are the implications for the U.S. role in the global financial system? As one looks at the landscape of cryptocurrencies, it's useful to keep one distinction in mind. That is the distinction between central bank digital currencies, which could use the same cryptographic technology as something like Bitcoin, and then non-official cryptocurrencies, which are essentially created in the ether, are a digital asset with no backing behind them, unlike the US dollar, which does have backing. Now, there are many proponents of the US and other economies moving to digital forms of fiat currencies. And I think there are some legitimate arguments about how that could reduce activity in the shadow economy, reduce illicit activities, improve the tax base, and in some ways even make monetary policy more efficient, even at the lower bound, where the Fed may not be able to use interest rate policy anymore. If all of us were to have non-interest-bearing deposit accounts with the Fed, which is fast becoming technologically feasible, and this is what Professor Tobin had suggested, this would make a certain aspect of monetary policy implementation a lot easier. But it's worth thinking about money in a broader sense. Money is created by the central bank, but also to a much greater extent by commercial banks. And I think this is going to have a serious implication for money creation in the economy, because as new technologies, new financial technologies more broadly eat away at the standard business model of banks, and as non-bank financial intermediaries start playing a major role in the financial system, the question remains, what role will banks play? Because those are the institutions that the Fed has direct control over and that are responsible for creating loans and therefore for creating deposits and a very important part of money. The other aspect in terms of thinking about the Federal Reserve's digital currency or any central bank's digital currency is what it does to the payment systems. Right now, the Fed has no role in retail payment systems. It has a very important role in intermediating financial transactions among the major financial institutions in terms of clearing and settlement of their transactions. With non-interest-bearing deposit accounts, one could well end up in a scenario where the Fed essentially starts managing a retail payment system as well. It's not obvious that this is the ideal solution, but it's worth thinking about the alternative. If, in fact, we had a situation where both the retail payment systems and also the wholesale payment systems among banks are managed through distributed ledger technology, which might become feasible, then what happens in a time of crisis of confidence? In normal times, this actually might lead to significant gains in efficiency. Again, the private sector might do far more efficiently than the government the management of these payment systems. But the issue of trust in the central bank, especially at a moment of crisis of confidence, becomes really important. So if you look around the world and think about central banks like Sweden that are thinking about introducing a digital version of the fiat currency, the objective they have in mind is not to intrude or reduce innovation, but basically to provide a backstop to the payment system to make sure that it's not all in the private sector and subject to a crisis of confidence. There are other concerns related to regulatory arbitrage and the possibility of cross-border capital flows, again, illicit as well as licit, that could be facilitated, which would certainly improve efficiency, but also potentially also make underground activities easier to execute. And finally, on the issue of the US dollar's role as a global reserve currency, there I worry less. I think it's possible that if other countries were to issue their own currencies in digital form, you could have the medium of exchange shifting towards non-official cryptocurrencies, towards other currencies. But what preserves the US dollar's role as the ultimate global safe haven is not just its role as a medium of exchange, but its ability to serve as a safe haven. And that requires U.S. institutions, which I think are still pretty strong and are going to retain foreign investors' trust. So I think as a store of value, the U.S. dollar's role remains secure for now. Thank you.
Thank you. Mr. Pollock, you're recognized for 5 minutes.
Thanks, Mr. Chairman and Mr. Foster, members of the subcommittee. This hearing poses really interesting questions, which to answer require some speculation and guessing, along with thinking, we hope. Among the intriguing questions is whether Bitcoin or another cryptocurrency could become a successfully privately issued fiat currency. That would mean being widely accepted, constantly used in payments and settlements, used to denominate debt and other enforceable contracts, and people going around and not asking what's the price of Bitcoin, but what's the price of this in Bitcoin. We're a way away from that, but it's imaginable. As the chairman said, the history of money demonstrates a wide variety of monies that have been used. There have been numerous historical examples of private currencies, but to my knowledge, there's never been a private fiat currency. Those are reserved for the power of governments. For private currencies, as an example, circulating notes of state-chartered banks were common in the 19th century. You might have carried in those days in your wallet a $5 bill from the Third State Bank of Skunk Creek, for example, or hundreds of others. But all such notes were banked by the loans and investments and capital of the issuing bank. They were not fiat money. The dominant historical trend in money has been to create ever more central bank monopoly of currency over several centuries of development. Will the new and ubiquitous computing power of our time reverse this trend and create more competition in currency? With Dr. Michel and the famous economist Friedrich Hayek, I think it might be a good idea, but I don't think it will happen. Bitcoin theorists imagine it will, but I believe it's easier to imagine moving in exactly the opposite direction, that is, toward even greater monopoly by the central bank through digital money. Mr. Foster made the point it's not only our own central bank, but other powerful central banks we might think about in this context. And many central banks are indeed interested in having their own digital currency, so the general public, not only banks, could have deposit accounts with the central bank in addition to carrying around its paper currency, and the appeal of this idea to central banks is natural. It would greatly increase their size, role, and power. With current technology, this would clearly be possible. The central bank could have tens of millions of accounts with individuals, businesses, associations, municipal governments, and anybody else. And there's not much standing in the way of that in terms of pure financial technique. But would it be a good idea? No, it wouldn't. In such a scheme, the Federal Reserve would be in direct competition with all private banks. It would be a highly advantaged government competitor, and it would be regulating its competitors. That's what central bank evolution tried to develop out of. In the American banking system, there are about $12 trillion in domestic deposits. Could a Federal Reserve digital deposit account system grab, say, half of them? Why not? That would be $6 trillion, which would expand its balance sheet to $10 trillion. Now, what's key in this is to remember that if you have deposits on one side of your balance sheet, you have something else on the other side. So what would the Fed do with this mountain of deposits? And as my friend Norbert said, well, it would have to make investments and loans. It would become, by this means, the overwhelming credit allocator of the American economic and financial system. I think we can safely predict its credit allocation would unavoidably be highly politicized, and the taxpayers would be on the hook for its credit losses. The risk would be directly in the central bank as opposed to central bank support of somebody else. So as Norbert said, I think to have a central bank digital currency is one of the worst financial ideas of recent times. Still, it's quite conceivable to think of as a possibility, and it's good for us to think about it. In conclusion, I think if we look at the money of the future, digitalization will continue. But I don't think the fundamental nature of money will change. It will surely be the monopoly issuance by a central bank. It might be a private currency backed by reliable assets. I don't think it will be a private fiat currency like Bitcoin. And as we consider all this, an increase in the monopoly power of central banks, which already have too much, should be avoided. And thanks a lot for being able to share these views.
Thank you for your testimony. And the chair now recognizes himself for 5 minutes for questioning. Let me just start with this idea of cryptocurrency potentially supplanting or displacing U.S. Federal Reserve notes as the world's reserve currency. And this is for anyone who wants to chime in. With greater use of electronic payments and the advent of digital currencies, do you think demand for U.S. Federal Reserve notes will decrease? And what implications does that have for the U.S. dollar?
I think if you look at why the U.S. dollar is as strong as it is and is in demand as it is, you have to look beyond just the fact that we have a Federal Reserve that prints Federal Reserve notes. We have an economy with strong property rights, especially relative to many other countries in the world. We have an incredibly well-developed, industrialized infrastructure here. And as long as you combine those things and have a dynamic economy, then the assets of that economy, including the money that's predominantly used in that economy, are going to be sought after. So that's what you should focus on if you want people to want our money, if you want people to want to use our money. And there's also a downside to being the world's reserve currency, and that's that we can basically sort of continue the fiction that we can print as much as we want and lend as much as we want. And that's frankly not a good idea. So that's just not the way that I would think of those things.
Anybody else want to comment on that? Mr. Pollack?
Another way to think about that is that the United States has had and continues to have, as my old friend John Macon used to say, a competitive advantage in wealth storage services. And that's an advantage that arises out of social infrastructure, all the things that Norbert said, rule of law, enforcement of contracts, a strong financial system, and, of course, a powerful government enforcing all of that. And I think that will continue. But we talk about bank notes, and U.S. dollar paper currency does circulate around the world, as we know. Nonetheless, I think the electronic forms of money, certainly in the wholesale markets, will become ever more dominant, in spite of the advantages in some situations that paper currency has, like privacy.
Dr. Prasad, you wanted to...
It is difficult to see an asset that has no intrinsic value and no backing by the government maintaining value as a store of value. The initial promise of something like Bitcoin is that it might become an effective medium of exchange. And that promise hasn't quite panned out, because it turns out that it is very inefficient and very costly to transact using Bitcoin. So in fact, many of the non-official cryptocurrencies that are gaining more traction as mediums of exchange are in fact ones that are backed by fiat currencies or other forms of backing. So there is one called Tether, for instance, which is backed one-for-one with the US dollar, and that is beginning to get traction as a medium of exchange. So ultimately, the US dollar, as was just pointed out, is maintained in its dominant role through US institutions and the trust in the Federal Reserve.
Let me follow up by by starting with a more kind of fundamental question. You talked about the volatility of digital currency, and maybe that is the principal reason why it's not the best medium of exchange right now or store of value. But at its very core are cryptocurrencies money? And I invite anyone to chime in on this. And if not, if cryptocurrencies are not money, do they substitute as money? Do they function as money substitutes? Dr. Garrett?
Yeah, on that point, I would point to Hayek, who didn't like the word money as much as he liked the word currency, arguing that that's a property, so a thing can have currency to a different extent. And so, is Bitcoin money? Well, for regulatory purposes, we may not want it to define that way. The IRS CFTC has defined it as a commodity because that's necessary for regulatory purposes. But in terms of the conceptual idea of is it money, it is to some extent, but it's not currently a very good one for the reasons that have been articulated. It's not very good as a medium of exchange because the price is so volatile. That means that or a store of value, but as a medium of exchange, it's not good because if we think the price is going to go down, I don't want to receive it, and if I think the price is going to go up, I don't want to spend it. So this volatility undermines its features both as a store of value and as a medium of exchange.
My time's about ready to expire, but would its properties as money improve? Would its quality as money improve? Would its volatility decline based on adoption rate? Is adoption rate all that is required to improve its qualities to get to money?
Well, yeah. I mean, people have to start using it for transactions. I mean, if that happens, then the price volatility might start to decline.
The adoption rate has a lot to do with it. The way Bitcoin itself is set up has a lot to do with its own volatility, but that's only one cryptocurrency. But yeah, so I would just in general say yes, the adoption rate has a lot to do with it.
My time is more than expired. I will now recognize Dr. Foster for 5 minutes.
Thank you, and thank our witnesses again. Recently there were reports in the press that estimates of about 20% of all Bitcoin had been lost, which strikes me as implying that whatever government or central bank issues digital fiat currency, if that was a representative number, it would be a tremendously profitable enterprise to be in. If 20% of your cash never came back to be redeemed. And that's in addition to the interest expense if there's no interest paid on these digital instruments. And so it strikes me that whatever country starts doing this and becomes the de facto standard is going to have a permanent cash cow. And do you see anything wrong with that analysis?
Congressman, I'd say for any issuer of currency, you like to have your currency lost or put away someplace. You remember American Express checks, which were kind of currency, used to encourage you to put them in your attic and save them for the future, which was tremendously profitable for American Express.
Yep, and on the other hand, there have been some concern here that somehow there'd be a big evil government monopoly taking over all banking functions. It seems to me it would be pretty self-limiting. If there was no interest paid on these things, an average person would maintain just a convenience level amount of this and not have all of their net worth in something that paid no interest. And so it seems like you just have a reasonable fraction of everyone's net worth usable for short-term transactions. And then they would separately, in a very competitive banking and investment environment, allocate the main bulk of their investments elsewhere. Do you see anything wrong with that analysis? Yeah, Dr.
Yes, I do. I think the Fed would pay interest. Just as they do. I'm sorry.
All right, yeah, well, as they don't on cash. Yeah.
But just to be clear, the notion that is being floated right now is of non-interest-bearing deposit accounts. Right now, this is not a clear proposal yet. There are different ways of thinking about how to set up a central bank digital currency, but the notion of deposit accounts is of non-interest-bearing deposit accounts. So the concerns that you could have this asset superseding other assets is highly unlikely because, again, it would be a zero nominal interest rate yield instrument just like cash currently is. In regard to your concern about potential technological malfeasance, this goes back to the 7th century when paper currency was first printed, when counterfeiting was a concern, and that's remained to this day. One could argue that digital forms of fiat currency could reduce the concern about counterfeiting of paper currency, but they are on the flip side, and in most issues here, there is a one side and the other side. But the flip side here is that certainly they would make them very vulnerable to technological hacks, and this is why I think most central banks are very concerned about moving forward very aggressively with this because of technological vulnerabilities that are potentially out there.
Yeah, and so the promise of blockchain is that it provides essentially a non-falsifiable ledger that would prevent a lot of malfeasance. I think the kind that you still will, I think, forever be worried about is the business of authenticating the person who has access to move these balances around and operate that system. And that remains an unsolved problem in the digital world, is how you really authenticate yourself for different levels of transactions. Dr. Garrett, how does actually Sweden handle this issue in their proposal? For example, in the Swedish proposal, do swipe fees just disappear, and that you can pay How does Sweden deal with the problem if someone steals your cell phone or your identity somehow and proceeds to spend a bunch of money? Is there a mechanism to get your money back when a fraudulent transaction has taken it away from you?
I think if you're regarding to the current SWIFT system, this is a system that's run by the central bank in cooperation with private banks. So these are still centralized accounts. So in the event that your cell phone was lost, you would still have access to go to the bank, reveal your identity, and get your account reinstated. Or you could probably just do that online. So Sweden has issued something called an e-krona report, where they're considering alternative new technologies to deal with the replacement of cash, but those are still just proposals.
Okay.
And among those technologies that they're considering is a stored value technology.
And in China, which has just massively apparently adopted digital transactions for consumers, at least, is that essentially an account balance with the two big players whose name I forget, Alipay and whatever the other one is. So these are essentially, everyone has a balance on there, and I pay you by transferring some of my balance in Alipay to you, or is there some government operation behind it or central bank operation behind it?
WeChat essentially is based on using the WeChat platform and the Alipay platform, but with balances that are already at your bank account, so you can link it to your bank account. What Sweden is considering is two options: either a register-based system, where you have these electronic deposit accounts like I mentioned, or a value-based system where essentially you download digital cash onto your electronic wallet, which could be like a credit card. So those are the two options in Sweden that are being considered.
Thank you.
Gentleman's time has expired. The chair recognizes the vice chairman of the subcommittee, Mr. Williams from Texas.
Thank you, Mr. Chairman, and thank all of you for today's hearing. We're in the exciting first stages of the digital currency movement's adoption by mainstream stakeholders, and it's become apparent to many that blockchain and other new technologies as the digital currency space offers solutions that have the potential to drastically alter the financial sector that does business. As Congress and regulators determine how best to treat these emerging products, we must be mindful of the impact our actions have on innovation and the free enterprise. At the same time, however, it's important that policymakers keep in mind the legitimate governmental interest in preventing the use of anonymous digital currency by those who wish to do us harm. I look forward to discussing with the experts today on the best path forward. So my first question, Dr. Michel, is you state in your testimony that Congress should work diligently to eliminate tax and other legal impediments to the development of alternative currencies as well as new applications for blockchain technologies. What are the impediments to development of alternative currencies, new applications for blockchain technologies, and what can Congress do about them?
I think the main one, honestly, I do believe is capital gains tax. The fact that you have to keep track of basis in every single transaction you would make, that's a major impediment to using anything other than the U.S. dollar for your transactions. So that's the biggest one. Otherwise, on a regulatory side, I think if we look at BSA, Bank Secrecy Act, anti-money laundering laws, ensuring that nothing is treated differently. Yes, it is true that criminals have used Bitcoin, but criminals also have used airplanes, computers, and automobiles. We shouldn't criminalize any of those instruments simply because criminals use them. Those components, I believe, are the main barriers to to a more widespread adoption of these things in the U.S.
Okay, thank you. My next question is Dr. Garrett. Your testimony presents three options for consumers in the event that cash is no longer available to them. Number one, use commercial bank deposits for everyday transactions. Number two, demand direct access to digital central bank issued money. And thirdly, turn to privately issued cryptocurrencies. So what would cause consumers to choose options 2 and 3 when option 1 is an existing familiar technology that is already becoming increasingly convenient as a payment method?
So first of all, let me say that I agree with what you said at the end there. I mean, there's nothing wrong with our current banking system, and people have been and as I mentioned in my testimony, new means for transferring commercial bank deposits are constantly arising. That's increasing the ease with which we make not only person-to-business payments, but particularly peer-to-peer payments, person-to-person payments. So in those scenarios I outlined, the first scenario is probably the most likely. But as cash actually disappears, that starts to create problems in a society. Sweden is currently dealing with this. And the governor of the Riksbank recently wrote an opinion piece where he talked about some of the pain points that occur when physical cash really starts to disappear and when businesses stop receiving it. And so what I'm really talking about is that future scenario. And at that point, the central bank has to decide if it wants to withdraw completely from providing a payment device for the general public or whether it wants to offer some sort of digital alternative. And one of those digital alternatives could be possibly down the road some form of cryptocurrency that's offered by the central bank. And the primary reasons for doing that, I think, one would be if you wanted to allow some type of privacy component within transactions of this currency, like is currently possible with cash, subject to limits, and as I said, balanced against the risks of tax evasion and criminal activity. These are the options that the central bank will ultimately face, and my argument is that these are something that we should be prepared for.
Okay, let me stay with you, Dr. Garrett. With the dozens of digital currencies out there, all with different attributes that make classifications difficult, what is the appropriate framework for us to use if Congress approaches legislation addressing the digital currency?
Well, that's a very difficult question.
That's why I ask it to you.
Well, people have the ability to issue these private currencies, and they're going to exist. And I think, just like Dr. Michael said, one can't make something illegal just because it might be used for illegal purposes. What I'm arguing is that I believe that the central bank does a good job at providing payment services, and not only just at the interbank level, but also for small payments by the public. And I think the central bank should continue to provide the best possible product along those lines. And what I'm arguing is that in a future date, that best possible product might involve some of these new technologies, but issued by the central banks to remain competitive with those payment devices, as opposed to some of these private currencies, which are less able. We're less able to monitor and less able to.
Gentleman's time has expired. The chair recognizes the gentleman from California, Mr. Sherman.
It seems like some think tanks demand at every turn that we do things that make the federal government less able to meet its financial obligations, and then they demand that we have an extensive and expensive foreign policy that costs well over $1 trillion. There's no way to square that unless we abolish Social Security and Medicare. We have moved from a gold from 2,000 years ago to drafts and paper currency symbolizing gold, to where the paper currency itself has value. And now, for many decades, what has value is paper that represents the paper. I pay my rent with a check, which represents paper dollars, which, as recently as the 1930s, could be converted into gold, but can no longer be. We now have an opportunity to disempower the federal government and to move that power to those hostile to it. We need a medium of exchange. We need a unit of value. The witnesses have demonstrated that the dollar is much better at that for honest citizens. But cryptocurrencies offer unparalleled advantages to nations that the U.S. government wants to sanction for their terrorist activities, to tax evaders, and to criminals. Mr. Pollack, what is this seems to be a solution looking for a problem. What can an honest citizen not do to store value, to effectuate a transaction? I can be in the smallest hamlet in rural India and use my Visa card. I've never had a problem paying somebody unless I didn't have the money. So it's we have pretty efficient, mostly digital transfers of dollars every day. What's the problem we're trying to solve, except for the problem that the narcotics dealers have?
I think the proposal being made for private fiat currencies, which, as I said, Congressman, strikes me as an unlikely outcome, a private fiat currency as opposed to a convertible currency, is to give optional ways of settlement for anybody who wants to use it.
But, I mean, I've got a means of settlement called the dollar. What is the great failure?
And you have another one called the euro. And
I have many choices. And
as you point out, you used to have ounces of gold.
So what problem do I have that they're trying to solve unless I'm a tax evader or a narco-terrorist?
I don't think we can. First of all, I'm not pushing, as you know, this solution.
I'm trying to illustrate that it is a solution only to the problems of tax evaders, criminals, and terrorists.
But you might. Excuse me. You might.
And offers an opportunity for profit by speculators speculating on a currency whose sole value is to help the aforementioned ne'er-do-wells. Go ahead.
You might argue that people deserve, just as I think Dr. Michel did, and in my written testimony there's a quote from Friedrich Hayek on this, the freedom to choose the denomination of the transactions they want to
We should allow people to own guns in many circumstances. But if the sole advantage of a particular gun is that it has a special tape on it to prevent fingerprints from adhering, and you would say the honest citizen who wants to hunt wants to make sure that the deer cannot identify the fingerprints of the hunter, I would say the sole benefit of that particular tape on that particular gun is to facilitate criminals. What, other than facilitating criminals and allow people place bets on the value of a criminal tool? I mean, we can speculate on the value of burglars' tools. What does this do? What problem does it solve? Can you identify one? Because I can't.
I don't know the extent to which cryptocurrencies are used in this criminal way. I suspect they are to some extent, but so is cash, and as Dr. Michel says, so are a lot of things.
Rifles are chiefly used for hunting. Rifles with designed not to have fingerprints on them are predominantly used for crime.
The gentleman's time has expired, and the bells signal that votes have been called on the House floor. We will recess for votes in a moment, but we will go to Mr. Hill for 5 minutes of questioning. Then we will recess and we will return. And for members who have not had an opportunity, we will reconvene for the remainder of the hearing for your questions after votes. At this time, we will ask Mr. Hill for his 5 minutes of questioning.
Thank you, Chairman Barr. Appreciate the time today. Very interesting panel. I was at the U.S. Chamber this morning talking about fintech and the advantages of exploring how blockchain can change business economics and accounting and logistics. Very interesting topic. Today we're talking about something that is the headline, which is constantly chatter about cryptocurrencies. And when I listen to your testimony, I just have flashbacks, not personally, of course, to the 1830s. I'm thinking about wildcat banking when we had no central bank, thanks to President Jackson's insistence that we didn't need that. And every state and every business and every town issued script or currency. I have a book at my house of obsolete script and currency that's a collector's guide, and it's very thick. So help me, Mr. Pollack, understand that why is this any different? I mean, I can't imagine that any one privately issued cryptocurrency could be any more accepted than another in a big picture sense. Why is it not like wildcat banking of the 1830s?
Congressman, I think it's exactly the same as I tried to suggest in my testimony. I said in my written testimony, I have in my collection, maybe my book isn't as fat as yours, a nice copy of a $3 bill issued by the Wisconsin Marine and Fire Insurance Company, which acted as a bank in the 1840s in this period you're talking about. I think it's exactly the same, except those currencies did have a claim on the assets of the bank if the bank had good assets.
Thank you for that. And Dr. Michel, I think if I remember Article 1 right, coining money is an enumerated power of the Congress, not the Federal Reserve System. Yet I'm always, in fact, Chairman Powell got the question this morning, like Chairman Powell can decide to do cryptocurrencies at the Fed. Where is all this? This would still be pursuant, obviously, to Congress directing that we do this. And so tell me your views on that legally.
Legally, I hate to venture a guess because they seem to be able to do quite a bit without legislation.
This is no surprise from your testimony. Yes, thank you. And then Dr. Prasad, a question for you. You talked about potentially, because of blockchain, truly an innovative area, that potentially you'd make some forms of money or credit, I'd say, obsolete, like in account payable receivables, for example. People wouldn't necessarily have as big a line of credit. So you're concerned about future credit creation and open market operations. I assume that's where you were coming from in your testimony.
That's part of it. If you think about the previous congressman's question about what is the point of cryptocurrencies, there are many inefficiencies that lurk in the financial system, including ones that result in crisis. But also if you think about payments, either using your Visa or if you think about cross-border settlement of transactions, those are painfully slow, sometimes quite expensive. And these technologies in principle provide a way of getting around those issues. They, in principle, again, I emphasize that, could make transactions much easier to verify, to follow through. They could ensure finality of settlement of transactions and bring down the cost. We're not quite there yet, but that's the prospect, and that could affect the traditional model of banking, especially as non-bank financial intermediaries. We talked about Alipay and Alibaba in China. They take over, and that could affect how the Fed thinks about financial stability and the transmission of monetary policy as well.
Thank you very much. In my time remaining, Mr. Chairman, since this is the Monetary Policy Committee, I have to commend to our viewing audience and to my colleagues Mr. Pollack's recent writings on the 40th anniversary of the Humphrey-Hawkins Act, one of my personal favorite laws. And we celebrated today quietly here as we had Chairman Powell testifying, and I always find the goals of Humphrey-Hawkins odd. You have full employment and price stability. So I didn't get to ask my question, and I'll let you have the last word, Mr. Pollack. How is price stability consistent with perpetual inflation, setting a 2% inflation target?
It is not. That's one of the great mysteries of the Federal Reserve, how stable prices, which is actually the term in the Act, is consistent with their announced strategy of perpetual inflation.
Thank you. That's one of the great mysteries of finance. I yield back.
The gentleman yields back from those good questions, and I am informed that because this is going to be an extraordinarily long vote series on the House floor, we may be losing members, and so I'll reverse course and call on our colleague from Ohio for the last set of questions for the hearing, and that is Warren Davidson, who is now recognized for 5 minutes for the final question of the hearing.
Thanks for the bonus time, Chairman, and thank you all for being here. And I assume you're relieved a bit, so you won't be waiting for us for an hour and a half or two to get back over here. So thank you for your expertise in this. And I think just beginning with the nature of currency, what is our currency? And part of the stability of the U.S. dollar lies not just in the resources of the United States, but in the resources of the world, the petrodollar. Everyone has to settle their current account at some level in U.S. dollars because everyone uses crude oil. And so we have an effective monopoly on settlement there. And it dealt somewhat effectively with the problem of mercantilism involved in gold. So it prevented hoarding because the oil isn't hoarded. Of course, Congress continues to tap the Strategic Petroleum Reserve, so I assume eventually maybe we can find an end. But in the background of that, what creates the stability of money? And I guess I want to get at, in cryptocurrency, we use the word for everything. We use it for crypto securities that are really nothing more than non-voting shares in companies in some cases. This is what the SEC is trying to regulate. We've established that numerous of these crypto commodities are effectively commodities, but we're not quite sure that they're currencies. Mr. Pollack, you summed it up well by saying there's a big gap between how much is this in Bitcoin. And so I guess that's the question I'd like the panel to explore. Maybe Mr. Michel, would you like to pursue? Dr. Michel?
The question specifically being
the nature of money in crypto. So what would make a cryptocurrency a currency, not just a commodity, not an asset? How do you move from whether it's Bitcoin or Petrocoin or Michel coin, Warren coin?
I like the sound of that one. That was good. If we're talking about a medium of exchange, then what we have is either a currency or a substitute for currency or a substitute for money. If it's all digital, maybe we shouldn't call it currency, but the idea is what is the medium of exchange? And my whole point is that people should be allowed to use whatever medium of exchange that they want to use. The fact that many people think that the Fed is great and the Fed is fine and we should just stick to the central bank that we have, that's wonderful. If nobody else ever believes that way and hardly anybody adopts any alternative form of money, then there's no problem. Nobody's going to use one. But if somebody comes up with something better, then we should allow that to take place because
you highlighted earlier that the government shouldn't favor one or the other. Well, we clearly do. We coin the money. And we have the official money. We have the legal tender in the United States. Mr. Pollack, how do you see migrating that path for something to really become a currency?
To be a currency, as I tried to suggest in my remarks, you have to be readily accepted in settlement of payments and debts, and to be a unit which is used to denominate contracts. And that means that people in general believe that that currency is going to be available and accepted by other people, and they have to believe that other people accept that, and everybody else has to believe that other people will accept that as well. It's a strange social creation, money that comes out of belief backed up by sets of enforcement of
It's a great history of money. Mr. Garrett?
It's highly curious to think about.
Yeah, I'll just build on that. I mean, I think what you're really getting at with your question is, why does Bitcoin have any value at all? And as Mr. Pollack just said, for a currency to have value and to function as a currency, it simply has to be the case that you accept it from someone on the belief that someone down the road will accept it from you. Right. And one of the interesting things that makes that work, apparently, with something like Bitcoin is the currency supply rule. There's a fixed rule for how the money increases over time, but that's known and fixed. And so you don't have to worry that the issuer of the currency will behave irresponsibly and devalue it. So that's sort of a fundamental aspect that gives Bitcoin value. Once somehow that process has started where people have started to believe in it. But it also it can be problematic because it means that you have a fixed rule and you are not able to provide currency in a way that might be beneficial in general for the economy.
Thank you so much. I'm sorry I couldn't get to everyone, and frankly I couldn't get to nearly all my questions, but nearly universal liquidity I think is the defining characteristic, and then we can't get to the store of value related to Petro. But thank you so much for your time, and thanks for your indulgence, Chairman.
Thank you for your questions, and thank you for yielding back your time. And I'd like to thank all of our witnesses for their testimony today. Again, I apologize for the brevity of the hearing. I think we had a lot of members with a lot of interest, but because of the interruption of votes, we will have to end this hearing a little bit early. But given the fact that digital currencies and cryptocurrencies will continue to have a greater and greater impact on our financial system and the broader economy. I'm sure we'll be revisiting this issue and exploring this topic further in the future. Without objection, all members will have 5 legislative days within which to submit additional written questions for the witnesses to the chair, which will be forwarded to the witness for their response. I ask our witnesses to please respond as promptly as you are able. This hearing is adjourned.
Thursday.